Bonjour à tous, bienvenue.
Good afternoon, everybody. Welcome to this panel discussion. My name is Dominique Seux. I'm a journalist for Les Echos newspaper, daily newspaper, and for France Inter, French radio. Welcome to this session on financing real economy. So I'm not going to try and find the perfect transition to introduce my colleague from the Cercle des Économistes. I'm going to leave it to him. So let me introduce the panelists, bearing in mind that all of us are on site. Because unfortunately, the two panelists, one from Morocco, one from the US, that were supposed to be following this remotely, could not be with us. So all the panelists are here, and I'm sure there'll be lots of you, following this either live or catching up on it. Nicolas Namias is the managing director of Natixis. Bertrand Dumazy is the CEO of Edenred. You know, of course, about Edenred for lunch and vouchers. Virginie Morgon, representing the private equity sector. She's the managing director of Eurozeo. Maya Actig is the managing director of the French Banking Federation. Good afternoon, all. And to your left, Nicolas, to your left, Olivier Perronnet, who's the CEO of Finexi, and the economist for this session, Bertrand Jacquillat, representing le Cercle des Économistes. Over to you, Bertrand. Thank you very much. Good afternoon to you all. Thank you, Dominique. So my job is to introduce this topic. The topic is financing the real economy. So let's give it some thought. Financing the real economy. So I get the impression that the organizers thought it was an oxymoron, you know, with two incompatible terms. Meaning that financing and the economy are not necessarily compatible, so they insisted. Says the man who probably came up with the title. But having said that, well, finance, you know, has a bad reputation. This opposition, you know, pitting finance and economy against one another. There's an old traditional debate between Cambridge, UK, and Cambridge, Massachusetts, between the two world wars, between Schumpeter and Joan Robinson. Joan Robinson was an English woman, admirer of Keynes, and Schumpeter, who went on to teach at Harvard and to be the father of creative destruction. So Joan Robinson was a Marxist, and so they opposed one another. So finance is like a wart on the beautiful face of economy. But if you look at the list of the 60 or 70 Nobel Prizes for economy since it was created at the beginning of the 1970s, so that's 50 years ago. But sometimes there are 2 or 3 each year, so that's about 70 economists in total. Amongst the 70 economists, there are at least you'll find at least 15 economists who were finance specialists, professors in Chicago, for example. And when you look at their works, they worked at prices as signals and facilitator for good allocation of resources. They worked on corporate governance, on the integration of the objectives of stakeholders. So they've worked on a variety of things, on the differences in information and how to overcome them. So we're talking about works that have real impact, but sort of underground on the economy. And I'll wrap up on this chapter of my introduction. More recently, Joseph Stiglitz, who is an opponent of American capitalism, recognizing that financial innovation has proven to be a key to growth. In the environment and ecosystem in which we live, well, that environment is more conducive to a rehabilitation of finance. Currently, in the economy, there's a major crisis at play, and governments have behaved really well from an economic perspective to avoid bankruptcies, high unemployment. So we're coming out of it almost unscathed, and it seems that the economy is going to bounce back rather nicely. But that's one thing. On the other hand, the state has given a lot, has got into debt, and what's more, this pandemic has accelerated an economic transition that is rather conducive to creative destruction. Borrowing the words from Schulpeter and Philippe Alliot. So we need to finance that whole part of the economy, and we lack equity. Michel Didier, who used to be a member of the Cercle des économistes, and in last year, is my time up? Well, there's a lovely young lady in the front row with signs for she's our timekeeper. Well, thank you very much. We'll come back to you in a minute. So we are going to focus on 3 questions. So there'll be 3 rounds, if you will. The questions are complex, but they're rather banal. Is there a problem? What are the solutions? And we'll focus on climate. So first round, and I'd like to hear you, hear each and every one of you for 3 minutes. Is there such a thing as good investments at the right time in the right place, and is there enough of those? So is there a problem in channeling investment in the economy? We've understood that all the economy is real, but in productive economy, in the broadest sense of the term. So over to you, Maya. Well, the question of the directing or channeling of investment, the total volume of credits and of financing to the economy matches approximately the needs of households, needs of the state, and these needs are considerable and are bound to increase. So in terms of volume, a no-brainer. Right, okay, the volume, if we look at all the savings that exist, it's used to finance projects of private households, of the state. So that's what we see on the balance sheet of banks. But having said that, if you look at savings, savers actually look at regulated products, and up to 100,000 euros per person. There's the pair profitability and saving, and it will be directed towards investment that a market economy in its purest sense would not recommend, which is to say that it is financial intermediaries that are left making decisions with these constraints in mind. But for a more sophisticated part of the population, with wealth to manage, they do not currently make the spontaneous choice to invest in the productive economy. But are there certain sectors in the economy that suffer from a lack of investment? Well, everything is pretty much fungible, so you can't say that €1 of bank savings is not directed to the tech economy. So you can't say that there's a massive deficit in one sector or another. It's all a question of price and financing structure. So if I sum up, it's going pretty well, but there's a few buts. Yeah, generally speaking, the system works, and it works better and better, adjusting to growing needs in financing. Same question to you. Well, if you look at savings, it's increased by 67 billion. So we are around 265 billion euros worth of savings in France. 200 billion needed to finance companies, and 50 billion of equity needed to finance companies. So those are the two sides, if you want. So you need to either increase debt or increase shareholders' equity. But there are two types of shareholders' equity. There's external equity and internal equity. And the best way to finance the development of the economy is to increase internal equity. That's to say, capacity to reinvest profit, to generate profit and to reinvest that profit. So how can French companies become more profitable? There is the problem of profitability of costs, but also of the increase in income. The French population should consume more, because those 65 billion worth of savings is sort of the state debt being displaced. So yes, we could better finance the French economy. The best way to do it is in a short loop. It would be for the 65 billion to be spent investing in economic sectors that are not offshored, and that can't be offshored. And if we were able to do that, then it would be a win-win. Well, if I were there in the audience representing the state, I would hear that those 65 billion euros worth of savings do not belong, 165 billion do not belong to the French, and that there's a way to better allocate these potential resources. Well, that would be pushing a little bit. What I'm saying is that we have the technological resources and solutions to reallocate these savings without necessarily doing it through taxes. I'm talking of a close loop, a short loop to reallocate these resources, but we'll come back to the solutions. Okay, so the problem is to identify, well, hello, ladies and gentlemen, because Jacques, you said hello, gentlemen. Well, I don't know if you're hot, but we're probably hotter than you are, because we're in the spotlight, which means that our thoughts are liquid. Well, I'm not going to try and have you agree on this, but Maya maybe spoke from the vantage point of financing, and I'm going to speak from the vantage point of support to entrepreneurs and investment in equity. I consider that French savings have been invested in euro funds. Who amongst you in the audience is not the proud owner of at least one euro fund? Ever since the Second World War, euro funds have the preference of French people. So no, French savers have not financed, at least not directly, the real economy. But I think we're at a turning point. First, because the return, the yield on euro funds is getting lower and lower. So there is a necessity to give to yield and better return on these euro funds. So we have to make it so that savers take risk again. And I'm talking of a tipping point because governments have really been driving forces over the last 18 months. They worked hard to redirect finance to back to the real economy. I'm thinking of the aviation sector, the health sector, through the French Insurers Federation. So, and it's investors considered to be private equity, such as Euroseo, that can be instrumental in that. So many IPOs that we should be really happy with, but a number of stakeholders such as Euroseo and in private equity have increased the direct investment in the real economy. 450 companies are part of Euroseo, a major part in France. So it begs the question, in 2021, the key is not so much investing the real economy, but better financing the real economy. Since we are trying to catch up and we're trying to channel that investment, well, we have to do it in a committed and sustainable manner that protects and generates jobs, and moving towards a more carbon neutral world. Thank you very much. Nicolas Namias from Natixis. The two bankers are sitting side by side. Well, Bertrand said, hello, gentlemen. You said, hello, ladies. I'll say, hello, ladies and gentlemen. Financing the economy. I think we've talked about this ever since I started my career. But right now, we are emerging from a phase when the economy really ground to a halt, and entering into a context in which there's an abundance of liquidity. Two figures. Last year, if you look at the quantity of money generated, it increased by 75%. And if I look at currency in circulation, it increased by 45%. 15%, sorry, last year. Faced with that, there can be two different behaviors. First, because there's abundant liquidity that could come and that could actually disrupt the valuation of assets and contribute to an overvaluation of these assets. That's the first scenario, which is worth looking into. But the second scenario on which we really should work, it's to make it so that this abundance of liquidity does not only increase the asset bubble, but can finance new assets. This is really what we're talking about. And I agree with what Bertrand said. Financing the real economy, well, it's meant to be slightly provocative or oxymoronic, but I think what we should be talking about is for it to be a catalyst. So the vision of companies, and then the finance sector acts as a catalyst and makes these projects and these vision possible. So the project, what are the projects that are emerging? What are the projects that we want to implement so that there is no asset bubble? And so that we can move towards the second, my second bullet point, which is new assets. Well, we have to trust the intermediaries. We have to trust all stakeholders in this system. Intermediaries, because intermediaries will have the responsibility to bring financing, but fundamentally to project leaders that will really bring these projects to fruition. Well, a lot has been said. Hello, everybody. Olivier Perronnet from Finexi. There have been some converging assertions. We have a banking system that is robust. Private equity and intermediaries, it's already been said, play their part. As a specialist of evaluation, I think there is a risk of overheating on asset valuation. We can see that the valuations are at a very high level, and I think it's really something we should be watchful about. I'm not trying to break a consensus. Virginie Morgon was saying that there's a lot of small investors coming back to the stock exchange. I think we've talked about how we can reallocate, redirect savings. It really depends on trust. I think we can safely say that we've escaped, we've been able to avoid the worst that could have happened, and we should be optimistic about the future. Having said that, overheating and disruption that could result from that overheating in asset valuation should really be a point of attention, and we'll come back to this question of channeling savings into financing the real economy, and targeted financing. I think through asset value, there's a risk that we really have to be mindful of. Well, I think we pretty much concur when it comes to the diagnosis. No major issues from a macro perspective, but there is a question of channeling these savings and financing so as to really determine where these investments are most needed. So let's try and have a hands-on approach. Those 165 billion worth of savings, shall we have a second round, or shall we leave it to whomever would like to speak? Who has the mic? Okay, so Bertrand. We don't need those 165 billion worth of savings. Don't let it sleep there. Spend it. That would be really my my advice. Those 165 billion are a boon. And at Edenred, our company, we're able to actually direct that money. We're able to tell you where that money is going to be spent. And I'll give you an example. It's a great tool that economists have been looking for a very long time, because it's very difficult to actually direct or channel French people's savings. If you look at something very mundane, luncheon vouchers, well, and you decide that it's not 19 euros that you can spend on your lunch every day, it's going to be 38 euros. Well, you go from 14 to 21 euros, meaning that thanks to this new system, you can redirect the money of savers to sectors that you're interested in. Hospitality, the hospitality sector has been really badly hit. Apologies from the interpreter. We couldn't hear what the gentleman said. Something about a hefty commission for someone, but of course that was a joke. So, to channel those expenses. What seems to me that Julien de Normandie, our minister, wanted to channel this into fair local trade. Well, maybe he should ask for our advice. No, but more seriously, technological solutions exist, and if that level of savings goes down because it is channeled to sectors that have been badly hit, I'm thinking of the hospitality sector, but also the event organizing sector, the arts sector, this is the real economy, this is the local economy. Yes, Maya. I'm going to look at the other end of the spectrum to say that not necessarily the 165 billion worth of savings, but what's already on deposit accounts and savings books. Independent from what happened during the pandemic, which is already in the hands of financial intermediaries. A big chunk of it will go on being managed by these intermediaries according to prudential rules. So this is not local, this is not down to earth. It is rather up in the clouds and quite remote from us and very international. The biggest risk in financing the real economy would be for the rules to put off investments or make that investment more costly in infrastructures, in transports, and in real assets. And what would follow is that if intermediaries that at the moment are trying to share it evenly across sectors. So what are you talking about? Prudential rules? Yes, prudential rules that have an impact on the cost of credit for banks, not for companies themselves. This is not science fiction, because what happened when Basel II rules were set up in the year 2000, overnight the participatory debt completely disappeared, or almost completely disappeared. So to rekindle that, it was very difficult. So the worst is never certain, says the phrase. But I think political decision makers, public authorities, as well as the financial sector should be really watchful, because rules that seem very technical and remote could translate into deterrence when it comes to investing into real assets today.
Virginie. Well, maybe talking again about private equity and support to French companies, few solutions. Well, first, the PACT law gave us a framework for and regulation that makes it easier for us to work. So maybe we should start using what we have. Could you explain about that? Well, several measures were implemented so as to allow us, in terms of tax, to have an optimized real capacity for entrepreneurs and savers to invest in real economy with a wide array of choices concerning investments in private equity or French private equity, or using FCPI, FCPR that have existed for more than 25 years. So with what we have, we are perfectly able to enlarge the attraction of such a type of investment, because of course they're riskier than what historically the French invested in euro funds. So we need to explain to the people what it means to invest in real economy, and to have the ambition and the pride of doing so, but there's a risk attached to such an investment, so that the savers must be willing to be long-time investors. And you would be surprised to see that, in fact, savers, invest in the long term, and they are perfectly willing to have added risk when they invest in something they've identified. It would allow also us to revitalize the economic French landscape. 10 years ago, Eurazeo made strong choices to invest in French tech and now in European tech. Now, for a few years, you don't see much, but then it becomes exponential. And I don't want you to think that COVID has increased this French and European tech. It was already present in B2B, B2C, B2B2C before the crisis, and it played a pivotal role. Companies had to follow this tipping point, and there will be no turning back. So InsurTech, FinTech, French tech, all those access platforms make it easier to finance. And companies really need such platforms because we have important needs. And we, Europeans and French, because we're in Aix-en-Provence, wish to feed those investments rather than have foreigners enter the capital of such companies. So the French savers would have the means, if he feels like doing it, to increase the growth of unicorns or SMEs. Thank you. Nicolas Namias, Olivier Paronnet. Thank you, Dominique. Well, solutions must be meaningful and have a technical aspect. Now, concerning meaning, we talked about channeling investments, and we wish to accompany transitions, because you used the term, Virginie. We are trying to finance transition, and I've identified 3 of them. The environmental, climatic, energy transition. It is a major one. Then the technological transition in terms of data, AI, and then wider transition that is a social and societal transition that should help us deciding upon our investments. And we have to integrate those criteria. So our economies must follow a transition. But supporting such a transition means that you need to accept a part of risk, and that you have to focus on the risk appetite for the investors. So we need some technical transitions or solutions. And I talked about that with Patrick Artus, and I tell him that he's the best economist in France, but it's difficult here today to say such a thing. But I have one at Natixis, and there are industrial solutions, ruling solutions, and tax solutions. In terms of industry, you need to offer more investment products for a class of assets that are channeled towards real assets. This is what we do in private equity, and sometimes you don't need intermediary. That's what Virginie does, or with intermediaries. That's the industry dimension. Now, if we consider regulation, Maya, you talked about banking regulation, but there's also regulation for insurance. and Solvency II regulation, so as to assess the equity. We look at the solvency of assets in a 1-year time, and then we could appraise them over a 5-year span, so that we would have a better understanding of the risks. And then the third type of solution, which concerns taxes. Today, there are incentives which tend to promote liquid savings without risks. Now, if we look at a few figures, loans that are securities that are guaranteed by the states, the cost of equity in companies because of the pandemic, that is 90 billion euros. Well, if we look at the picture of such a situation, the need for equity is really pressing. So if we need to prepare for the future, then the need for equity is a crucial stake. And we need to address the question of accepting the risk, because French savers were educated somehow in accepting low risks, and they should be educated to accept risks, because we cannot do everything in such an economy which is regulated by the state, so that savings that are channeled towards risks are very important. Now, the recipe that Bertrand gave, that is trying to restore margins and profitability, are a way to ensure future investment and have equity. But if you want to attract investors, I think that to have people aware of the long-term risks and to avoid financing some sort of a dead economy, but talk about the future, is really essential. And that's a very nice transition for the third point I wished to address. I wished you to address, in fact, that is financing the climate. Is there a sufficient amount of money available? Is it well invested at a good level of risk? Do we know about what will be useful in 5 years' time? Is there greenwashing in finance, or is it over? Maybe it existed 5-10 years ago, but no longer anymore. So, but I see that Bertrand, who's very quiet, might wish to step in between those rounds. Maybe we could have a private lesson to end the introduction. Sorry about that. So, is money missing for the climate? Well, we talked about that earlier. And we all agreed, to your great surprise, Dominique, that financing energy transition was not lacking money. So you're the spokesperson for the group, right? Yes. And I think that the message is a very positive one, because it means that the consequences will be interesting, because companies today must think about the project they wish to have, which path they wish to follow towards the Paris Agreement. What can companies and households do? And the question of financing is a no-brainer. Let's be very realistic. Throughout the world, if people want to stop their coal plants, finance the hydrogen or the electronic transition when they work in the automotive sector, there is no problem of money. No, not in Europe. And it's a reality, because there's a diversity of financing, positioning of the financing actors. Banks are in the top 10, whatever the segment of climate financing you're looking at. So it is a commitment It is technique, just like Nicolas said. It's support, like Virginie said. And what matters is to think that the financial sector is on the move for a very simple reason, which is that the needs are great. And you say, do we know what will be needed in 5 years' time? Well, the answer is no. But what I know is that people are preparing for new projects and ideas to finance. So we need to be nimble and to build the tools for us to be flexible and develop those new skills. So it's innovation in the financial sector to accompany such transitions. So you mean that in the banking sector, your teams in your banks are aware and know how to spot the useful project, the one that will be useful in 5 to 10 years. Okay, let me give you an example of how we try to organize ourselves. We share the idea that there's financing. And one day I don't know if you saw that there was a protest with banners that shocked me somehow, because the banner said less banks, more ice on the poles. But what I believe is exactly the opposite, because we need more banks and more financing to have more ice on the poles. Why so? Well, let me tell you how we organize ourselves. First, there's the question of the portfolio. What you wish to finance, what you financed in the past, and what you will finance tomorrow. So you have to ask yourself about the portfolio. And a few years ago, this meant that there were elements we would not finance any longer. So, for example, coal, we stopped financing in 2015. Shale gas, we stopped in 2020 because we consider it is a responsible move for the community. So we have to do that, but we must go further. The role of a banker as an investor is not to exclude people, it's to support people. Excluding people is the only a small part. What matters is to accompany the transition of our customers, and we need tools for that. So there are classic tools such as the needs of the companies. We issue green bonds, for instance, but we also have KPI-linked bonds. So the company pays its financing not only to finance a green asset, because it might be limited in terms of capacity to issue financing, but the financing is also connected to commitments. So it's KPI-linked bond. So KPI are quite recent. Second example at Natixis, we developed a new tool a year ago that we called the green weighting factor. And it means that when you have a credit, you need capital. And the capital is regulatory. So the decision I made at Natixis is that when we finance a green asset, I give less internal capital to the credit, meaning that we will have a more interesting financing for our customer. And when I finance a brown asset, that's how we call them, I keep on doing so, but I allocate more capital, and the financing cost is higher, which will probably help the transition from brown to green. Okay, time is up, but today we have the tools to do so. I was looking at you, but I couldn't see the panel, the board. Okay, so is greenwashing still possible, and is there a green financing? As a company leader, our last lines of financing, 8 million euros and 1.2 billion raised in 2 years' time. and the financing rate of the tools is directly linked to our commitment to reduce greenhouse gas. So if we do not deliver, we, Eden Red, well, the cost of those financing line will be much higher. So it will be 10 to 30 basic points. So it's several billion euros. And that's quite significant for a company like ours. So the green revolution has started, and bankers are finding the incentives to look for the goals we set ourselves, that is, the goals in accordance with the Paris agreements. So what we accepted 2 or 3 years ago in terms of balance to be found does not exist any longer because it's harder and harder. And that's quite interesting because constraints create talent. Now, a second point, because I have 165 billion to spend, and it would be a good way to restore the margins of the companies and to generate equity. So there's an initiative that was launched in Belgium that is a good example to have a green economy, and it's a channeling of consumption. There's a product called EcoCheck, and people can receive up to 100 euros per year, but those checks can be spent only in environmental products. And if you wish to use it for something else, the transaction won't be accepted. And it is a way to raise awareness. And Thierry Pech at Terra Nova talked about that in his articles, because such stimulus are technologically possible, and they are reallocating consumption towards more environmental and responsible products. Yes. Concerning green bashing, I believe with the COP21, well, we were talking about greenwashing, in fact. But yeah, but on the subject, today we are convinced it's a business, and that's quite good news. Because as soon as investments are channeled towards the green, it is also about being exact concerning this. So we just have to go and move forwards and be as quick as possible. Now, green is not something you talk about. It's something you invest upon, you build, and the more investments are strong, the more the transition will be quick. And we see that rhythms have accelerated. So the subject is not about choosing green or not. It's about choosing green and being confident. Now, about trust, national territories such as ours, competitivity and research can help us fueling a cause and a demand. Well, everything could be summed up with a wake-up call at the beginning of 2021, wake-up call of the USA, and an increase of awareness in Europe. Now, maybe if my viewpoint is different, I wish to point out a few things. First, it takes a decade to change energy mix in a company, to commit to carbon neutral by 2035 or 2040. You need experts. You have to measure your impacts. And the changes on the supply chain you will have to make, or the investments you'll have to make to change the mix. And Europe has not waited for this wake-up call to measure the importance of the stakes and the investments that will be necessary. But it's about measurement. Euraseo, 15 years ago, some people claimed for diversity, others for responsible jobs in the company. Others were passionate about climate. And this is a strategy that we communicated upon in 2012 or 2013, and then last year with an O+ program. But we've been measuring data since over the last 15 years. We have more than 400 companies at Eurazeo, and we have a strategic plan, but also what we call an extra financial plan, which is about government, diversity, the role of women in the company, and the impact on the climate. So we need measurement and expertise. I think the wake-up call is wonderful because we're going the right way. I'm not sure this is greenwashing. I'm sure that people are just discovering the trend, but they can accelerate it also. We need to measure our impact and to quantify our goals so as to reach 2035 or 2040. But 10 to 15 years are needed to become a champion in such a commitment and be recognized by the indexes that are assessing you, especially when you're a listed company. We were talking about this at lunch. We have a science-based target that help us reaching the goals, and I think the method is core. It all starts with a conviction, and at Eurazeo, and I think this is true for many companies that are represented here, we wish to be an impactful company and not only have impact funds, because maybe you will give in good conscience. So it means you refuse some cases. No, it's more complex than that. You cannot exclude everything. Otherwise, in 5 years' time, the topic of our debate will be, are there enough financing for excluded sectors? So the transition won't be possible in 5 years' time. We need financing for oil and gas sectors. Otherwise, we'll have structural problems on a global scale. People are focusing on hydrogen, but the impact will be there in 2040 or 2050. The thing is, everything must be done to accelerate the transition on all sectors, especially climate, and we have to change our MO. It's a culture. It's just like diversity of the role of women in a company. It's cultural. Okay. Bertrand, maybe you wish to say a word. I have a question for you. What does The Economist say concerning the utility of the three levers? That is investment that will finance technology. So finance, technology, and carbon tax, that is prices. Of course, the three of them are efficient, but could we be given quantity? Well, the three of them are efficient. I cannot favor one over the other. So if anyone has an answer to the question, I'd be delighted. But I wish to point out those were very rich debates. But concerning the second round you asked and the last one, second and third question you asked, and I'd like to talk about financial innovation that might finance real economy. That is the idea that L. Didier from Rexecode pointed out. So there are many savings, it needs to be spent, but precautious savings of people who do not want to lose money and wish to use the money at will. On the other side, and this is a vicious circle, you have risk investment and there are many things to finance. So how to proceed? Well, I think the state could give some sort of a purchase option and guarantee that people would use their saving in a vehicle where the savers could use the money whenever he wants. But if he stays for a long time and the investments are private equity, that might be general or thematic private equities, and then the state would buy back the shares of the people who wish to leave before the end of the investment. So the state would buy back and he will have the shares, which might be profitable, because private equity is quite profitable. So I think this would be an interesting idea to answer the many questions you asked. So the option could be given by the state. Okay, public finance then. But it's a good idea. Okay. One question that came on my pad. You did not talk about the needs which are interesting for the public sector. So private financing of non-productive activities could be well used by the public state. So don't you think a Biden plan is much more efficient than the money invested by the private sector? The huge recovery plan or transition plan of Joe Biden? Well, the question starts from the fact that the private sectors are not interested in several investments. And maybe that would have been right 5 or 10 years ago. But in fact, there are no such sectors. And a more direct answer to the question would be that between the recovery French plan or the next-gen EU plan, there are financing that will complement private financing, or there will be co-investment with private money for projects that might be more innovative or astonishing, so as to experiment upon things. And I think this is an answer to the question. There are recovery plans all over and at all levels. If they are used, well, that's for the better. If they are not, it means that the projects were too few or that the financing could be found in another way. To give you an illustration of what Maya says, government starting March last year mobilized several stakeholders, and we are in 10 different countries. So insurance companies, private investors, public investors in sectors such as the aeronautics or tourism or also health. Now there's a big recovery plan relying upon bonds that will be launched. So France was innovative and ingenious, and those public-private partnership will be much more efficient than the trillion that was voted by Mr. Biden. Okay, I wish to go further then. Because when I read the last report of the Council for the Climate, they said, yes, there's money and investment to try and mitigate global warming, but we do not have the money to adapt to climate change. So what about planting trees, changing the tires so that it resists the heat? Railways so that they resist the heat. So that's some sort of a loophole that was identified. Well, Now, the difference between mitigation and adaptation has been known by environmentalists for 20 years. But the thing is, I asked a very long question and we only have 47 seconds left. Well, globally, we have financing and people wish to invest on such a theme. And we have probably more investment and capacity for financing than demands or projects. Maybe there are counterexamples that could be found, but I have not seen examples of projects in the green sector that do not find a financing, and which is a less costly financing than a traditional one. And talking about the assets you were mentioning earlier, investing in the green will probably become more expensive, so there will be a slight overcost or a bubble because the tech is growing exponentially. But you'll see what will happen concerning those green assets, and you will probably think they're turn out to be very expensive in a short delay. Thank you very much. It is 4:40. Thank you.